Welcome to Wild Bull Trading. This is the Dividend Harvest podcast series, episode 2. I'm releasing new episodes every Sunday. So if you're looking to harvest dividend, let's dive into the video. I'm covering three basic things in this video for every stocks on the dividend perspective. The first one is EX date. This is the ex dividend date where the stock trades without dividend, which means that you have to own the stock before this EX date. You can sell the stocks on EX date to capture the dividend. Payment date is the day on which the company distributes the dividend payments. And dividend amount, how much is the sum of money that you will be receiving per stock? It sometimes it's in dollar values or sometimes it's in cents. Okay, so these are the three key aspects I talk about for every stock. There are a lot of stocks offering dividends, and so many stocks are there in the market, but I'm only covering the key ones, like the one that provides more dividend values. Okay, on the series, let's dive into the stocks. The first one is VRTS, which is Investment Partners. It's a financial services company specializing in asset management. The EX date is Jan 30th and payment date is February 15th, and the dividend amount is $1.90. The key aspect of this, including the stock, is will it provide a capital appreciation? So you are going to get into the stock, buy it before EX date, and then sell it on EX date or after EX date. Okay, will my capital be preserved and will it kind of retained, or will I see capital appreciation? Those are all the type of stocks included in this episode. If you see, the stock is trading at 246, and right now the stock is kind of above the moving averages. There are two moving averages in this chart. The one at the very close to the candlestick is a fast moving average. The one a little bit behind is the slow moving average. I consider if the price is above this moving averages as a bullish one, and the stock will continue to grow. Okay, that's the idea behind it. And right now the stock closed $245.96 on Friday session. Okay, I preferably would enter into this stock probably like 238 rather than buying at 245. I would preferably buy at 238 and wait for the appreciation come into play. But I'm not so sure whether there will be a chance to do that on Monday. Monday is the day where you can buy, and Jan 30th is Tuesday where the EX date comes into play. Okay, so but there is a good potential for a capital appreciation here and also capturing the dividend for the stock. Okay, now moving on to the next one. uh, Texas Instruments, TXN, is a semiconductor company. EX date is Jan 30th, payment date is February 13th, dividend amount is $1.30. Look at the chart and you see that the price is kind of heavily dropping on last Friday session. Okay, and the one thing which makes me to consider this stock is like it is right now at the demand level. Anything with 164, 165, 162, those are all kind of demand zones where the stock bounced off in the past twice at least. Okay, so right now being there, and if you are kind of getting into this year 164, 162 zones, it might provide you a capital appreciation. Okay, so how much you can risk your dividend amount? $1.30. You get in, and then if that stock drops less than $1.30, it's better you kind of get out soon on EX date. Okay, otherwise you will be seeing a capital appreciation plus dividend value. Moving on to the next one. GHC, Graham Holdings, and it's a media and education company. And EX date is Jan 31. Payment date is February 15. Dividend amount is $1.72. The stock is nicely growing, and right now it is it closed at $737.04 on Friday session. The one big question is affordability of the stock for a retail investor. Okay, it's tough to afford until otherwise you have bigger capital available for you, but this has a potential to grow further. Moving on to the next one, Valero Energy, and it's um, global energy company specializing in refining, marketing, and retailing the petroleum products. And EX date is Jan 31st, payment date is March 4th, and the dividend amount is $1.07. If you see that the stock is nicely growing upside, and then in the last two sessions, it's kind of very nice growth came into play. The only concerning thing is right now it is at the supply zone. Okay, this is where multiple times it failed and then dropped down. Okay, if at all I want to buy and get into the stock for a dividend, I probably will aim for $130 to an entry. Okay, and I expect an appreciation and the upside. Will it come to $130 before the EX date? I have no idea, but do your due diligence and then see if you can get onto this. Next one is NSC, Norfolk Southern Corporation. It's a transportation company primarily engaged in railway industry. EX date February 1st, payment date February 20th. Dividend amount is $1.35. And the stock kind of dropping on the last week Friday session, but this is where it was kind of finding some support, like the price coming to 238 is the support level. Okay, so if you're looking to kind of enter into this for a dividend, and $238 entry spot would be the appropriate one, and your risk is $1.35. Okay, so the dividend value what you are aiming for. But if you get onto 238, and then if the stock bounces off to 230, 232, to 234, then those are all nice place, very nice capital appreciation plus a dividend amount that you will be able to capture. Okay. Okay, so now moving on to the next one, Costco, very well, and EX date is February 1st, payment date is February 16, dividend amount is $1, 2 cents, and the price is staying above the moving average. Right now it is trading at $686.88. That was the Friday close. It will bounce off, it will be moving upside. That's what my expectation based on the analysis. There will be capital appreciation plus the dividend, and the question is affordability of the stock for the retail investors. Okay. Moving on to the next one, SD, Sandridge Energy Company. It's an independent oil and natural gas exploration and production company. And EX date is February 2, payment date is February 20th, and dividend amount is $1.50. And if you see that the stock is nicely growing upside from 13, I think probably like $13, maybe like 13.50. From there it is nicely growing. No $1 growth came into play. Okay, and entry spot would be, I will be considering this as $14 15 cents. I'm not so sure whether it will be coming there, but if it is growing, and do your due diligence, dividend is $1.50. As long as the stock is not dropping below $1.50, there is a nice dividend value plus capital appreciation. You will be able to see it. Excuse me. The next one is MetLife. MetLife is a leading global insurance and financial services company. EX date is February 5th, payment date is March 14th, and dividend amount is 52 cents. And this is more like a um, insurance company, and the stock price is $70.88. Um, it's the stock growth is bit very slow. In fact, it is not going to kind of drop heavily, to my knowledge. That's what my expectation is, at least, because it's nicely growing. And the entry would be like $69 would be the nice part. $1.50 less than what it is today. And if the stock drops, probably entry spot would be 69, and expect nice upside growth, and then also dividend capture. Think pretty much that's all I have included for this episode's coverage. I've only found stocks which is kind of strong companies, and uh, bigger and better dividend announcements, and those are all the ones that I have included. And if you need any stock to be kind of analyzed, and then you need any further details, just put it in the comment on this video, and I'll be looking at it, and then I'll be kind of doing analysis. I'll share the detail. But key things to remember, this video is more on, how do we kind of capture the dividend by preserving the capital. Okay, we cannot have a capital loss, but at the same time we want to kind of capture the dividend, and manage your own risk, manage the risk, and you are putting the capital and manage the risk. Do your own research and due diligence. Talk to the financial advisor. This video is not a financial advice. I'm not a financial advisor. This is more of like an educational and information video. As I said, this is not a financial video, and this is not a financial advice. Please talk to your own financial advisor about all of these talks, and then try to see where you can get in, get out for capturing the dividend. Okay. And if you like this video, leave comments and subscribe to this channel. And thank you for watching and spending time with me here.